Hello, I'm Lori Hendley. I'm a mortgage lending officer for Regions Mortgage. First of all, I'd like to thank the Junior Achievement of Dallas for inviting me to speak to you today about rent versus owning. Now, this is a big decision, and after you complete your education requirements and job training and enter the workforce, you will find out that this is one of the bigger decisions that you make. Should I continue renting or should I buy? So with any major big decision, usually what I always say is the best thing to do is look at the pros and cons of each. And there are pros and cons to each one of them. So let's look at renting first. What are the pros or advantages of renting? One, you have the flexibility. If you rent an apartment or townhome, there's usually a 6-month or 1-year lease. And after that 6 months or 1 year, if you still like living in that particular area, you can renew your lease. If you do not, then, and you want to maybe move to another complex that has better amenities or move closer to work, then all you have to do is give notice and move. The other big advantage to renting is low maintenance. Anything breaks, repairs, whatever, you get to call the landlord and report it, and they usually come in and fix it. A third advantage is low upfront costs. When you go to rent an apartment, they're going to require usually a deposit. That deposit can be your first month's rent, and in some cases, it can be your first and last month's rent. However, at the end of the lease, if you return the unit in good condition and it's clean and it meets the rental contract requirements, you get your deposit back. So now let's look at the disadvantages or the cons associated with renting. First and foremost, you have no ownership in the unit. So there's no equity buildup or accumulation. Also, there's limited availability to customize your living space. You have to get landlord approval to do any kind of changes to the unit. And that can include even adding shelves or putting pictures up on the wall without their approval and maybe method of doing so. And if you do get approval, then you've just spent the money to improve someone else's property. The other is no control over rent increases. At the end of your your rental contract, your lease, the landlord can increase your rent. And if you don't like it, then you've got to move. So it forces that decision. The other one is lack of privacy. If you live in an apartment, especially a multi-unit apartment, if you have neighbors and if they're noisy neighbors and they have loud music or loud parties, or let's just say if you have a neighbor below you or above you and your neighbor above you wears high heels and she walks across the floor, you're going to hear it. So now let's look at owning. So what are the pros of owning, the advantages? Obviously, you have built the ability to build equity over time. A portion of your mortgage payment goes towards your principal, and you'll notice at the beginning it's a very small portion, but over the years it increases. You also get to participate in any type of market appreciation. So let's say you bought a house for $100,000 and 5 years later it's worth $120,000 or $125,000. Well, that's $20,000 or $25,000 equity in your pocket. There are possible tax advantages that can potentially reduce your tax liability. However, that is subject to tax laws at the time. Freedom to customize. Now you own it. You're not having to ask the landlord. You can go in, change paint color, floors, appliances, if you have a yard, landscaping, all of those things that which can potentially improve the marketability of your property. It can also, over time, increase the value. And then last, just a sense of permanence and belonging to a neighborhood and association. So what are the cons or the disadvantages to owning? Probably the biggest one is less flexibility to move. So if you have a life change, a job change, something that necessitates that you need to move, now you have to sell the house or lease it. And that is something that can take weeks or months depending on whatever the market is. As I said before, the home is an investment, and with investments, they're going to fluctuate with the market. So there is also the possibility that the home value may decline. Also, as I mentioned before, the tax laws could hamper the tax advantages. So we're always subject to whatever the tax laws will allow at the current time. And then, of course, owning is the upfront cost. Coming up with the down payment and the cost to purchase a home. We're looking at appraisal fees, title company fees, inspection fees, fees for the attorneys to draw up the note and deed of trust. These are hurdles that are really challenging for the first-time home buyer. However, there are programs out there that are designed for the first-time home buyer that allows down payment assistance, government subsidies like FHA or VA for lower down payments, and other programs that are similar. So how do you decide? First of all, if you've been employed for a while, you really like your area, you really feel comfortable with the stability of your employment and your income, then that may be something, and you can look at the area and say, this is a place I could see myself living for the next 5 years, then you may be ready to buy a home. My suggestion is it's an investment, but usually you've got to look at it as more of a long-term investment, and a suggestion would be like a 5-year horizon. Also, you need to factor in your current life situation, whether you expect any changes in the next couple of years, job changes, job relocations, marriage, family. Those are all factors that can weigh on you as far as whether you should buy or rent. What if you just move to a new area? I think this is a time where renting can be a really good option until you get more familiar and acclimated with the area, the town, schools, neighborhoods, commute times from different areas. So that's a time where renting may actually prove to be more advantageous. There are other expenses that you need to consider that are associated with home ownership, and that's property taxes, homeowners insurance, maintenance, repairs, increase in utilities. If you've landscaped, you want to make sure that you're paying you're going to have an increase in your water bill to keep everything alive and looking good. And then also, again, it's just a matter of timing and being ready. So my suggestion is if you've reached that point where you're looking in the future, you've found the area, you're feeling good about your employment, your income, then that's a good time. If it's you can look at it and say within the next year, I can see myself buying a home. That's a good time to sit down with a mortgage advisor, a trusted mortgage advisor, and let them pre-qualify you. Basically, let them pull up your credit report, look to see if there's any information on there that's incorrect, look at your credit, see if there's any late pays or there's anything that you need to do to bring your credit scores up. The lender will also look at your debt ratio, your monthly obligations like student loans, car payments, minimum payments on credit cards, and the proposed mortgage payment, and they look at as a percentage of your income. Then the lender's also going to look at your cash position. They're going to look at cash available for your down payment, the closing costs associated with buying a new home, and also cash reserves. The lender doesn't really want you to go to closing without a couple of months in your bank account in case of an unexpected or unforeseen change. After they do all that, they can pre-qualify you. They can tell you the programs that you qualify for. They can give you an estimate of your mortgage payment based on current rates. And they can also look at, give you an estimate on what your cash to close would be. That gives you a target, a goal of what you need to do to ready yourself in the next year to purchase a home. So as you can see, there's a lot to consider. So I hope that some of the comments and suggestions that I've made will help you and be useful to you when you're faced with this decision later on. Again, thank you for your time and consideration, and I wish you the best on your future endeavors.